Good morning. Good morning, good morning, good morning, good morning, Facebook and YouTube, right? So let me wait till this audience build. Get one of my favorite books that I keep with me for today, for the day. And I'm going to dive right into this, right? I'm going to dive right into this. Well, let me take my take this out. Take my daily vitamins for today, right? Take my daily vitamins for today. But the topic after I take my vitamin is going to be, if you have an option, make sure my volume is up. Good morning, Mr. Johnson. Thanks for tuning in. Yes, love that emoji. You had an option of paying off an installment debt, which is like your vehicle note or a loan, a lender loan, or revolving debt like credit cards. Okay, someone sent me a message about the webinar on Saturday. Which option would you choose to pay off first? You all answer that for me. Why? If you had an option of paying off a credit card debt that was the same, let's say you had a $5,000 credit card debt and a $5,000 car note, which one would you pay off first? What strategy would you use? A cash flow strategy, your vehicle note would probably be the highest as far as monthly payment. Or would you use this credit strategy that I'm about to discuss? So give me a second. Let me put my unit on. While I'm doing that, you all answer that question for me. Give me some comments. Interact if you're not driving. If you could pay off your credit card balance of $5,000 first, or your vehicle balance of $5,000, which would you pay off first and why? Okay, so that's my fish oil, magnesium. I'm not gonna do my vitamin C for today. So get ready to go. So let's have this discussion, right? You all know I'm always on the credit side. I had that thought this morning, and I know a lot of people will say, hey, if they're both the same balance, right? Get into my video. With recommendations. If I have a $5,000 car note that I'm paying $350 a month, and let's say you have a very, very good interest rate on that. Let's say you're at 4.25 or something. A lot of people will option out just because they're looking at, I get the opportunity to free up maybe $350 a month, right? Okay, I can free up $350 a month from my vehicle note or my car note if I pay that off, if it has a $5,000 balance. But if I pay my credit card off, at $5,000, your credit card payment would be probably your minimum payment due if you have good credit. If you have good credit, it won't be over $50, right? So from a cash flow perspective, that's my outside temperature notification. That makes more sense, right? Makes more sense. Look, I want to free up $350, but for me, let me give you another side of this. I'm looking to build my business credit next year. And what I mean by that is I'm going to start applying for business credit cards. So I have to be a PG, a personal guarantee, which means their decision of if I get approved for those business credit cards is going to be based on my personal credit profile, right? How much debt to income ratio. So let me give you this scenario. If I were renting, right? Let's say I pay rent, or I'm in an apartment complex and I'm a renter, I'm not a home buyer. And the car note or the vehicle note is the only installment loan or debt that I have on my credit report. And let's say my credit report is well over 720. And I pay off that vehicle note, right, for the cash flow strategies. More than likely, my personal credit will take a very, very huge drop. And this is why. Because you also have to look at your credit mix, right? You have to look at your credit mix. And if that was the only installment debt that I had reporting, then that will hurt my credit score more than help it. Although it'll free me up $350 more money, who would not want that? But now it will drop my credit score, possibly affecting my wage to use my credit to get qualified for business credit cards. Now, you may ask me, well, so what? You're going to have an extra $350 a month. Why do you care about business credit cards? Well, because I can use business credit cards, and there are a lot of them that I'm researching now that give you 0% interest rate. And I can, which will not even, it's ghost credit, it doesn't even show up on your personal credit. And it's very, very high. You can qualify for high credit limits on the business side because you're doing business, right? And I can get into a real estate investment and use my business credit or that business credit card. You have your check cards that you can use or to make purchases, or you can cash out those business credit cards, right? And now I can get a rental property that can cash flow me more than that $350 a month. So it's all about your strategy or what you want to do. Or maybe I can get a rental property and that's all our cash flow. It's $350 a month. But then you have to look at it. If I have a $5,000 balance left on my vehicle, right? If I choose first to get that rental property and pay off the $5,000 credit card, which will increase my credit score, now the $350 I get for the rental property offsets the vehicle note anyway. So either way, by me paying off the credit card first, the vehicle note can be zero balance. Now, if you're a person that say, hey, I'm not looking to invest into real estate, rental property, I'm not looking to acquire assets, then the cash flow strategy would be for you, meaning that you would go ahead and pay off your car loan. If you're not affected by your credit score, if cash flow is what your main focus on. So you have to look at those from different scenarios, right? If you're negative, if you're paying insufficient funds, if you have more a month than money, then, and you have struggled in some type of way, let's say you started a side hustle where you're earning extra money, right, and extra income, and you have used that money to save $5,000 to pay off, those two debts, then of course you will want to pay off that vehicle note, and then you can live with your credit score taking a dip, right? Taking a dip because you're not looking to invest for assets anyway. But my mindset and my strategy will be different. If I'm looking to invest for assets, then I would pay off my revolving debt first, the credit card debt. So that's why I tell people, thank you for the digital love. I tell people it's great to have a system. It's great to have a system. It's great to use technology. It's great to look at the analytics and look at, okay, this software system tells me to pay down this debt in this order. But you have to understand what your goals are and what you're trying to achieve. For me, because I'm trying to invest in assets and business credit, I will pay down my credit card debt, the revolving debt first, versus the installment debt that'll free up my cash flow, because I'm looking to make a long-term investment that will build me more cash flow. And that's why I want you all to reach out to me for your original financial plan and consulting, because the system and software will not always produce the best financial plan for you if you have other things in mind that you want to do with your credit score, right? So you pay down, for example, if you pay down that vehicle note, and then you still have your credit card debt, yes, you will be paying a lower monthly fee and you'll have more cash flow, and you can pay down that credit card debt at a faster rate as well. But also, you'll have to be fine with temporarily maybe taking a dip in your personal credit score. And what if that dip in your personal credit score disqualified you to build business credit? What if that personal dip in your credit score put you on the back burner for qualifying for a home, right? And so that's why I tell you, reach out to me for the original plan. Saturday, make sure you hit like and hit share for an original financial plan that can be customized to fit your situation, right? They can be customized to fit your situation. I've been posting on my timeline that you can invest $27 and get a $200 or $300 return, and you can. But you know what? Some people have gotten $500 or $600 more a month. First, it depends on their income level, and then it depends on their personal situation, meaning that if they're single, if they had a household, how many children they have. And so that's my W4 wealth strategy plan. Some people have had less than $200. Some people have had $50 a month that they've gotten, or $50 a week that they've gotten from their job. I have teenagers that work at McDonald's, fast food chains and things like that. They're in college and they get an extra $200 or more out of their paycheck. How significant for those children is that? And so I'm launching a new LLC as well, for my youth, because my daughter's 19. And so I really communicate and interact with youth ages like between 18 and 25, the young millennium. And so my new mentorship business LLC is going to be called Young Millionaire Mentor. So look for that rolling out within the next 2 to 3 weeks. Young Millionaire Mentors, because I connect with my daughter and a lot of college students. And for some reason, throughout the state of Mississippi, I have mostly young men right now, African-American males, 19, 20, 21. If you look, I did a live coaching call on Monday. That young man was out of Houston, Texas, and I think his age is like 22. And he started with a 350 credit score September the 9th. I remember that day, that's my mother's birthday. And then on November the 10th, 2 months later, he's at 556. And he's learning strategies now at that age, so he don't have to go through the financial, mistakes, I guess, that I went through. And so I'm so glad to be teaching the young millionaire millennials with that. So you have to strategize. Do you have a cash flow problem? Do you have a credit problem? And then you might say, hey, I have both. So which one do you need to focus on first? For example, if you want to get your credit fixed and you're telling me I don't have the money to pay you or whatever, I don't know where I can find the money, then you need to start with the cash flow strategy, because it's a $27. It's affordable So I can help you find that extra cash flow you need. Now, this only works if you are employed or you have a job, because it includes the new tax changes and finding money in your paycheck. And that paycheck has to be connected to a W-4. A lot of people are sole proprietors and they have 1099s and things of that nature. And so it has to be connected to a W-4. It's a holiday special going on, limited time. It ends in January, right? So back on the conference as well, this is what's going to be covered in the online conference. You get to watch it as many times as you want to. You get a private link for you once you get your tickets, your virtual tickets online. Sunlight is strong. And you get your virtual tickets online. It's $15 for those tickets. You get your private link. So even if you're not able, I hope you're able to watch it live, because it's only an hour. And the benefits of watching it live is you can get your questions answered live on hand. So if you have a question, you just type those questions in, right? You type those questions in, we answer them for you. You get that mentorship one-on-one. But if you're not able to, you made plans, you still need to watch it, because someone may ask a question. But we're covering very, very vital topics, like number one, how to pay down your mortgage in 5 to 7 years by just having an additional $500 a month extra applied. And I'm not saying, and it's not by sending an extra $500 a month mortgage payment in, or making bi-weekly payments to your mortgage, or at the end of the year sending in an additional mortgage note, a 13th payment in. That's not the strategy to do it. I want to show you live, plugging in the numbers of how people are paying off their mortgage in 5 to 7 years, right? In 5 to 7 years, with just as little as an extra $500 a month. And saving that money over time and applying a strategic strategy to do that. Now you may ask, well, what if I don't have the extra $500 a month? I just told you I can find it for you for $27, right? For $27. And then we will be discovering or discussing more in depth. And I'm saying we because Kevin is a tax professional, a tax specialist, and he helped people find thousands and thousands of dollars. For those people who might have a side hustle, who don't understand that if you took your side hustle and made it an LLC, a corporation, or a business, you can be getting thousands and thousands of dollars during the return season for your taxes, more adding to what you're probably already getting, right? So you know how that one chess move will save you or make you or earn you thousands and thousands of dollars. Also, I will be giving you the blueprint for a 720 credit plan. So, hey, this Saturday, 6 o'clock p.m., the link, I'll put it in the description, is www.mycreditandcashflow. It's power.com. I'm signing off. Have a Wealth Wednesday. It's Coach Deloach.